So in this video, I'm going to be giving a prediction on if 2025 is going to be the worst or best year to buy property. And I'm going to do this by sharing all of the economic and investment trends that act as a pretty good precursor on predicting exactly what happens next. And in case you're wondering why the hell you should listen to me, well, I've spent my life building a UK-wide home buying company, British Home Buyers, a nationwide estate agency, British Home Sellers, and my own personal property portfolio. So not only does that give me access to information you probably don't have, but when you create a business in the property industry and live and breathe it as I have for over a decade, you naturally get the inside track on what's happening before anyone else does. So let's get into it. Why do house prices rise and fall? So in order to understand if prices are likely to rise or fall, we firstly need to understand what factors influence house prices increasing or decreasing. Now, there is a conventional understanding that if interest rates increase, house prices decrease, and vice versa. If interest rates drop, as they've started to do, then house prices would start to increase. Which is why when interest rates started to rise, all the forecasts were expecting house prices to start to fall. But looking back at house price data, that clearly hasn't been the case. The top graph shows average house prices, which, as you can see, it looks pretty flat and actually shows a slight 2% increase over the last year. And the bottom graph shows the percentage change in house prices, which has had periods of dropping as low as negative 2.5% over the back end of last year to only recover again, increasing again this year, now growing at a pace of about 2%. The overall outcome has been a roughly 2% increase in house prices on average over the last 12 months. All this before the slight decrease in the Bank of England base rate that came into effect on the 1st of August. So looking at this, it is easy to assume that if house prices have stayed flat despite high interest rates, then there isn't a connection between the two, between interest rates and house prices. That higher interest rates don't lower house prices, but in fact there is a connection between interest rates and house prices. Interest rates have slowed house price growth because anything that reduces the supply of money is of course going to reduce the demand on anything that can be bought, property included. The mistake people make is it isn't the only thing that affects house prices. Interest rates aren't the only thing that affects the supply and demand of property. In green show all the factors that have a significant impact on the demand of property, and in the blue, the factors that affect the supply of property. So with the supply side of the equation, we obviously all know the supply of new homes being built has always been a problem for decades. But the reason I wanted to show you this graph in particular is because it shows how the number of building companies on the NHBC register has been falling for decades, whilst the volume of actual individual builders has been increasing about 3.5% a year. So we've become more and more reliant on a smaller number of companies to build all our new homes with a workforce that isn't really growing by much. And although Angela Rayner has now increased the new housing target to nearly 2 million homes this Parliament, an aim to build 370,000 homes a year, how realistic is that? Think about it, almost a doubling of what we're actually building at the moment. It's forecast that our current workforce of over 100,000 construction workers is going to have to increase to 250,000 construction workers to be able to make that target happen. Either we're going to have to train more builders or we're going to have to import them. So either way, it's likely going to take some time for the supply of property to increase enough to affect the supply against demand balance of property. But of course, on the demand side, something that can greatly affect house prices along with interest rates is if our population is growing or shrinking. So when we're in a position where there are only 400 more births than deaths, you'd naturally think that if we're building more homes than our population is growing, then it's likely to reduce the pressure on house prices. But in reality, we have somehow seen the biggest rise in population in England and Wales for 75 years. How? Because of immigration. Now, I'm not against immigration because in reality, it has been an essential part of our nation's history and will be a big part of our nation's future. But right now, it is clearly out of control. And of course, this is going to have put massive pressure on our housing stock. But this is a double-edged sword because let's say there was no immigration next year. On one hand, that would reduce demand on housing and on our infrastructure in general. But on the other hand, on average, European immigrants pay 64% more into the economy than they receive from public services. And non-EU immigrants pay about 3% more into the economy than they receive from public services. So both are net positive to our financial system overall, whereas a UK-born national currently pays less than they draw from public services on average, by the tune of just over £600 billion a year. So politicians aren't saying this because it's just not popular to, but our country is actually massively reliant on immigration to help balance the books. And it is unlikely that although Labour is going to try and reduce immigration to remain popular, it's not likely to dramatically drop, because if it did, yes, demand on our housing would drop, on our infrastructure would drop, but then economically we lose a net positive contributor to our economy overall. It's a massive issue. It's a real chicken and egg situation. And I hope me walking you through this info demonstrates that the chances of supply of property dramatically increasing over 2025 is probably quite unlikely, whilst the chances of the population decreasing or slowing anytime soon is also quite unlikely. You add to that interest rates starting to drop a little, it certainly seems those fundamentals point in the direction of increasing house prices. So what is happening right now to house prices? This shows the percentage change in house prices over the last 3 years. The yellow line shows normal average house prices year to year. Blue line shows average house prices year to year, but adjusted to inflation. It is really clear looking at this that from the property market bottoming out adjusted for inflation in the first half of 2023, that the recovery of the property market had already started to pick up steam in the second half of 2023, and that recovery has been progressing as quickly as it fell to begin with. Now with interest rates starting to fall slightly, it's not only going to make borrowing money cheaper, meaning you'll be able to get cheaper mortgages and bigger mortgages, but importantly, it is the first drop in the base rate for years. So over those years where rates have been increasing and increasing, it has simultaneously been creating pent-up demand of buyers that are just waiting for things to get better. Bigger and bigger pot of those buyers that have decided they're going to wait till interest rates start to drop before they enter the market to buy. Now that interest rates have dropped, the property market is without doubt going to start getting busier and begin climbing again. Especially as even before the drop in interest rates, the number of buyers, sellers, and properties coming onto the market are all higher than pre-pandemic levels. But notice how the buyer demand and number of sales agreed on the graph have been growing quite a bit faster than the increase in the flow of new property coming to the market. Look, if you think I'm off base here, comment why, but I think the fundamentals are pointing in one direction here, don't you? So will 2025 be the worst year to buy a house? I'm sure you've all heard this before, that the best time to plant a tree was 20 years ago. The second best time is now, and this without doubt applies to property. In reality, 2025 will be the worst year to buy a house in terms of house prices will reach record highs, competition for property will increase, but it may balance to be a slightly better year to buy a house because the cost of money will come down. So you may pay more for a house than you did in 2024, but your mortgage payments may be slightly less than in 2024. It's a double-edged sword, my friends. I'll see you in the next video.